And joining me now is Odwa Mgwentshu from Momentum Securities to give us his take on market activity. Odwa, thanks so much for your time this afternoon. And let's start off with general markets action. Trade has really been choppy this week in general. I thought that perhaps with the renewed trade truce between Washington and Beijing, that would possibly start seeing some real movement into the green. But it still seems choppy. Is the optimism failing or rather fizzling out? Or are markets not too impressed? Are they taking a wait-and-see approach?
I think when it comes to yesterday's conclusion is that there wasn't enough information disclosed. As much as, at least now, there's no outright war against the two major economies in the world, it's no longer, we still don't know where things are going. For example, we see now the tariffs have gone down to 30% against China and 10% against the US, which is favorable, but it still is at elevated levels, and seeing both countries currently going through a weaker economy. If you look at latest GDP prints, this also adds then to that caution that is the world economy going to grow at a fast enough rate for the world economy or like ourselves to react as likely.
And what's going on with the rand, Odwa? It's at 17.87. I mean, the last time I checked in the morning, it was around 17.70 to the dollar.
Yes, so I mean, with regards to the rand, I think it's just that with today's digestion of the news, the rand is weakening slightly. I think it's more so just stabilizing. We have had a very strong push to the downside in terms of the currency pair or strengthening of the rand, weakening of the dollar. So again, even with the US dollar, we've got consumers there, or investors rather, seeing positive that the rhetoric between the two major countries are not as elevated anymore.
Let's take a look at what also came out yesterday. We got that U.S. inflation print ticking up slightly to 2.4% in May from 2.3% in April. We've all been concerned about, the inflationary pressures, or rather the inflationary impact tariffs would have on consumer prices, but that impact still seems to be muted. What have you made of that print? Do you think those impacts are still to come?
Yes, I mean, when it comes to inflation reaction or how it impacts the market, it does tend to take a very long time. If you look at COVID's inflationary pressures only came in a year or two afterwards. So we are still in the early stages of the reaction of the tariffs. That's one. Secondly is that not only did the tariffs not go into full effect for as long as intended, we got a turnaround in the decision very quickly. So there wasn't a real implementation of the reaction to tariffs. Everything was fairly speculative in the beginning. So right now, we are still going to see these levels. However, what is worth noting is that the trend was going downwards in terms of the inflation number, and now in the first time in 4 months it's turning around, which could be first sights, but again I think we could be waiting a bit longer to see the true effects.
And now as we watch the Fed closely take that wait and see approach, things seem to be different over in the UK, and you touched on that GDP print where the economy slipped 0.3% in April. Yesterday we also got those softer employment numbers. Does this point to perhaps more rate cuts from the Bank of England?
The Bank of England has been aggressive in terms of cutting. However, I do think that they've reached a lifeline right now. They have way more than... they've also got internal issues, not only what's happening with tariffs right now. So I do think that on their front, to help the consumer, they're going to need to hold for a bit. They did drop they have been ahead in terms of cutting rates. Now I think it's time to hold. In terms of interest rate cuts, I think they're going to hold for a bit. And you said unemployment a bit softer, so they do have an opportunity to hold off in cutting at this point.
All right, let's look at the JSE. While the all share is in the red today, the JSE has really been resilient and there seems to be no stopping the local bourse. Yesterday, it broke through another record high, passing the 97,000 point mark. And that, of course, on the back of a rally in commodities, particularly in gold and platinum prices as well. What have you made of, the resilience we've been seeing playing out in the local bourse, and is it sustainable, considering that it really is being fueled by commodity prices, and we know how cyclical that can be? Yes, we do know that uncertainty over in the US will continue to boost safe haven appeal, and we are sure to probably see increase in the gold price in the short term. But on the platinum front, I am a bit unsure.
Yes, I think if you look at the two, it's been a tit for tat. One day it's gold taking the lead, the next day is platinum. And right now, I think a lot of people who are looking at investment opportunities are finding that the gold price is quite elevated, hoping that people do take some profits from it. However, the benefiters of this all right now, it has to be the gold miners. They are selling at a much more higher price range. With the platinum prices, not only are they now looking at safe haven, as you said, safe haven investment, where to put not only. Historically, it was all a focus on combustion cars and also perhaps green hydrogen. And now an extra element of demand is coming for safe haven protection. So I think that we could have a run. We do, if you recall 2 years or a while back, when you looked at the platinum price, it was around $2,000 an ounce. So there is still scope for upside movement in the platinum price, which would help with us. Our local platinum miners have been in the negative over 2 years as well. So there is some opportunity on the upside. I do also want to point out, yes, we have had great rallies on those two fronts, but Telcos has also done a great turnaround. If you look at Telcom, if you look at MTN's share price, that has also helped, and other strong results that have come out has helped this all-time high rally we're seeing.
I saw a rally in banking stocks as well after the interest rate cut and expectations of further cuts coming through from the SARB as well. So it's really been a broad-based sort of increase on the JSE. Just back on platinum, would you say that platinum has a safe haven appeal in this kind of environment, especially as the gold price becomes more and more expensive?
I think right now, yes, it does have an appeal, especially with the gold price. However, I also think that there's a lot of investors with money burning their pockets right now as they divesting from the United States. We're seeing that with a weakening dollar. We're seeing that with increasing yields in the bond prices, in the treasury bills in the US. So there is a need to place that money somewhere. We did see a short rally in silver as well. So precious metal in any form seem to be attractive at this point.
All right, let's hit pause on the conversation. Before we move on to your stock pick, let's take a moment to touch on some counters that have been attracting interest from your industry peers.
I'm going with Capitec. Self-help story, trading at a high multiple, but I think it is a business that can be relied upon. They've had a change of guard from within, and I think they'll continue to perform. It's a tried and tested business model that they operate, and I think they'll do well over the long term, even without South Africa's economic performance.
Yeah, I'm going to go. I'm going to go across abroad. I'm actually going to find something abroad, specifically Diageo PLC. Now, for the viewers out there that don't know Diageo, I think they will most probably know their brands. Johnny Walker, Guinness, Smirnoff. Captain Morgan. So
Yeah.
I think now I've got a few viewers now.
It's not
listening.
Puza Thursday yet, Skulk, please.
It's close enough. It's close enough. But this is I mean for let's call it investment reasons, it's really looking attractive. This is a company that's still trading way off its let's call it pre-COVID levels. Then post-COVID it really performed extremely well, and today trading pretty much half the price.
Okay.
What it was trading just let's call it post-COVID. When you look at the economists, they're looking currently at let's call it 22% upside target price for the company. So it's looking on a financial basis, it's looking good.
So Diageo and Capitec, your thoughts on those counters?
I've learned and burnt my fingers more than enough to know not to bet against Capitec, and
Yep.
I think it's still a good business. And Diageo, I think he is correct in the sense that it has been overbeaten, and I think it's the scares around people anticipating people aren't enjoying themselves as much. But if you look at their financials, they've been doing well. So those are two great choices they made.
And I like how you put it there. People aren't enjoying themselves as much. All right, where are you seeing opportunity this afternoon? What's your stock pick?
Well, my stock pick is Premier Foods. They've had released results very recently. Very good set of results. And they are part of the core staple diet, especially in South Africa. If you look at the likes of Iwisa and Blue Label bread. So, I mean, they staple foods. They've managed to cut their costs and increase their operating margins. And their financing costs, they've managed to also drop that a bit. I think well managed, growing quite substantially well, slowly but surely. And that's why I'm going with them.
All right, Odwa, thanks so much for your time and taking us through trade at midday. That was Odwa Mgwentshu from Momentum Securities.